And let's cross live now to London. And joining me there is Jan Randolph, Director of Sovereign Risk at IHS Global Insight. Well, Jan, Australia has had its biggest rally in almost 3 years, trusting that Europe has finally grasped the nettle, has it?
Well, there's a greater sense of urgency, led by Angela Merkel and Germany, the largest economy, a sense of urgency which is to tackle the problems head on. In terms of kicking the can down the road, they've run out of road, and they've recognised that. What they're doing now is looking at the banks first. They hold a lot of government debt, some of it a bit dodgy, and they're stress testing them for the worst case scenario, and meaning that those that hold a lot of dodgy debt will have to recapitalise. First from the private sector and later from the public sector.
You refer to it now as something called Euro TARP, don't you?
Yeah. Yes, it's a bit like what the Americans did, the Toxic Asset Relief Program, if you remember. The Americans came out with this huge public fund to support banks after they were stress tested, and those that needed capital could go to the fund, the public fund, to shore up capital if they couldn't get it from the private sector. Same thing's going to happen with Europe, except we're dealing with peripheral government debt, Spain, Italy, Greece, Portugal. Massive haircuts, hoping to get ahead of market worst-case scenarios and be able to tell the markets, look, the banks, even in the worst case of government haircuts, can withstand all this.
Where are the firewalls?
Yeah.
Where are the firewalls in this, then?
Well, it will start off at national level. For example, Germany's reintroducing its bad bank, the state-owned bad bank. That will provide the necessary capital for the German banks. The first firewall is at national level. The second one will be probably one at European level. And finally, the EFSF will be used for those governments that haven't got enough money themselves, like Greece, to recapitalise their own banks.
We've got a lot of noise, of course. There's been a lot of muddle this week. Italy getting a second downgrade, that Belgian bank Dexia needing a rescue, confusion over the IMF we've just heard about buying Italian and Spanish bond and then sort of withdrawing. Is this all just so much noise?
Well, it's all about, how to organise the implementation of this, involving the EFSF, the governments, and so on. They haven't quite got it there yet, the implementation side. They've certainly out of denial, and they're making good headway in terms of trying to tackle these problems head on, and that's why the markets have bounced quite sharply. But it's a little bit premature because they still have to organise the implementation of this.
Of course, the Bank of England and the European Central Bank are meeting today, and I guess on both sides of the Atlantic, the talk is about stimulus. And a stimulus to do what, I suppose?
Well, it's quantitative easing, but we've had that already, and really what that ends up is a lot more money in the financial markets sloshing around with big corrections as we've seen this year, and very little of it trickling down into the real economy to small, medium-sized businesses that need it. That's why the UK government's got a bright idea of actually using Treasury money to provide credit lines directly to small, medium-sized businesses and to circumvent the financial markets and the banking system. That's the sort of positive stimulus they could do. Finally,
Jan, back to Greece. If we do have a control default, what's the timing and what sort of haircut will there be on debt?
Well, I think all this bank recapitalisation is all about shoring up the banking system in order that when we do get a controlled default, a much harder controlled default for Greece, something like a 50–60% haircut on the value of Greek government bonds, that the European banking system can absorb that, or can withstand that, basically. But this is really looking into next year sometime after the the EFSF has all its powers awarded to it after all the parliaments have passed the laws. So once all that is in place, we can probably see about February a controlled default for Greece.
Jan Randolph, I hope you're right. Thank you very much for joining us tonight.